to let us kind of grab what we need to know about the week ahead.
Yeah, okay. Well, let's start overseas. Chinese economic data was, I guess you'd have to say, slightly disappointing. Their industrial production missed estimates. They were looking for 5%. It was 4.4. Retail sales, they were looking for a drop of 2.3%, came in at a drop of negative 2.8. Also, Asian markets got hammered. Japan ended up down 3.5%. Hong Kong was down 2.2. China was down 1%. And India was down 1.6. The narrative in the market today is we had been saying gee, there is an epidemic.
Mm-hmm.
The market had obviously saying nah for the last few weeks, but now the market has turned its attention back to the second wave narrative. Starting with China, Beijing reinstated some mitigation measures for the virus. They had an unexpected spike of cases linked to their wholesale food market. Kind of sounds like Wuhan that way.
Mm-hmm.
After 2 months of no infections, they reported 79 cases over the past 4 days, the biggest cluster in the capital city since February. They are closing schools again, and they're setting up security checkpoints in parts of the city. Also, Tokyo reported a jump over the weekend. And in the US, the states that are in various stages of reopening are reporting sharp increases in daily new coronavirus cases. That includes Alabama, California, Florida, North Carolina, Oklahoma, and Texas. Some of that is due to increased testing, but keep your eye on hospitalizations. North Carolina and Texas are seeing record hospitalizations right now. So, anyway,
That's not ideal, Lee.
no, it isn't. So we've turned our attention back for that. Although we have come off the overnight the S&P futures were down 99 points, so they've at least come
Mm-hmm.
back on that. Domestic economic news, we had really the only one was the Empire State uh, activity. It was a negative 0.2% reading, but the estimates were looking for a negative 25. So a little bit better than expected there. Uh, Remember, though, the dividing line between expansion and contraction in this series is zero, so it's still contracting.
Mm-hmm.
Um, yeah, so anyway, the only good part of that report was the index for future business conditions rose 27 points to 56.5, which is the highest level in more than a decade. But since things were the worst they were in a decade, yeah, it's going to bounce a little bit. Um, Anyway, that's it. We can go on to stocks in the news. Chairman Powell is going to be talking this week to the Congress. People want to see if he's going to walk back any of his more somber, if you will, comments on the economy.
They're hopeful he might walk back some of his somber comments, right?
Yeah.
Man, he's kind of sparked a firestorm this last couple trading days.
Yeah. British Petroleum, let's start with that. They're going to take a
Okay.
write down to $17.5 billion for the current quarter. They cut their long-term outlook for oil and gas prices. They're saying still around $55 though, longer term. Um, they're also forecasting a faster transition away from fossil fuels. So unfortunately, that news made it break the 50-day moving average. I guess the place you'd have to watch now on this one would be those lows around 21, those two lows.
Get my cursor up here. I'll give them to you there, right there, about 21 and a quarter. Yep.
Yep.
Yeah, the write down's always a nice decision on a business level because it just puts it in the rear view mirror, right? Okay, we had a
Right.
rough period. We can move past it.
Right. So you still have to say it made a higher low and a higher high, um, just from technical
To this
analysis
point.
101. Yep, to this point. Again, you'd only question that if you broke that 21 and a quarter area. Let's see. AstraZeneca, they're always in the news these days, AZN. Yeah, kind of a pullback to the 50-day there.
Hmm.
They signed a contract to provide European governments with 400 million doses of the vaccine. However, the vaccine, of course, is still in clinical trials. If it pans out, though, uh, they would start deliveries towards the end of this year. So all the vaccine stuff, I mean, there's plenty of them in trials, but again, nobody knows for sure if they're going to work. But
Hmm.
anyway, okay, let's see. Shopify. I know you were looking at that one earlier.
Well, I'm always watching that one.
Yeah.
Seemingly, it's a bit of a high flyer, lots of volatility. There's an indication of volatility. It
Yeah.
looks like they got an upgrade today. Is that right?
Uh, yeah. Piper Sandler upgraded them to overweight, but the news is that they are partnering with Walmart uh,
Hmm.
to provide third-party marketplace site for Walmart. So that's the big news. That's a
It
big
is the
deal.
big news.
Yeah.
Had a real nice hot start here. Gapped R2 initially here, running into R3 as we speak. Could be due for a bit of a short-term breather here at this point, given the move, but nice pop today, 7% nearly.
Yeah. I mean that is pretty favorable news.
No doubt.
Okay. Hertz.
Still in the
HTZ.
Hertz business, huh?
Yeah. I mean, they did get court approval to sell $1 billion worth of stock, although they
Hmm.
say in the prospectus, keep in mind, it's probably going to be worthless. But people are,
So who's going to buy that
I don't
exactly?
know. I don't know.
Somebody that needs a write down?
I guess. I do not know.
I am interested to see how that plays out.
Yeah, a lot of people have said that it's a very creative way to try to raise money as opposed to debtor in possession. I just don't know who would be buying it, but they are. All right. Walt Disney.
Okay.
All right. Broke support. Uh, Looks like if you like the company, you might use the 50-day to set your risk. We might be drifting down there. Uh, they will open their Disneyland theme park on June 18th, but they will have a reduced number of visitors, enhanced healthcare measures like social distancing.
You know, yeah, but it still sounds like that's a better setup in the long run, Lee, because now you don't have to wait in line. You
Yeah,
all have a schedule. It's like you show up and you can wander the park at your freedom. It actually sounds like this is something that's going to end up being a better process in the long haul.
yeah,
I mean, you killed so much time at Disney World and Disneyland just standing around in line. If everything is on schedule, run by an app, it seems pretty
yeah,
forward thinking. I have to wonder if this is something that sticks around for them.
yeah. That's very interesting. Um, okay, Broadcom.
Alrighty.
Pull back to the 20-day moving average. Yeah, right
Oh, well,
there.
I like that 20. I'm putting my green support line back to the lows of this little breakout area, which could come into play at some point if there was more weakness in the group. But like that it's finding the support around the 20, at least on the short-term basis today, Lee.
Yeah, they are partnering with Nokia to develop chips for 5G equipment. Um, Nokia had previously done similar deals with Intel and Marvell, but now they're adding Broadcom to the mix. Let's see, Intel in the group.
Speak of the devil.
Yep. Not doing too much feel better if it was over the 50-day moving average, but again, you can see the 200 has worked pretty well there. That long tail, kind of in the middle of the May, tested the 50 and the 100 and bounced right, 50 and the 200 and bounced right back up. Looks like the 200 is something you might want to watch there.
Yeah, lots of tails in that area too, Lee. The price action specifically that I was noting here is right around 56. If there was any kind of weakness that got you an extension below the 200 day, and you were given chance to maybe put a buy limit out there if this is something you're waiting on, I think all the tails and the tests of that 56.5 area there, Lee, or 56 and 56 and a quarter, make that a pretty interesting entry point if you've been waiting.
Yes, indeed. Okay. The news on them though was they were upgraded at KeyBank to overweight. Okay. Form factor, FORM. At least we captured the 20. You'd have to say, in spite of the sell-off last week, it still made a higher low vis-a-vis that big drop in first week and a half of May.
Mm-hmm.
They were upgraded to buy at Stifel Nicholas. They make semiconductor testing equipment. And Stifel said that they will benefit from their recurring revenue model.
Yeah, you got a good way to set your risk on this, Lee.
Mm-hmm.
You know, I think a lot of traders, even though the 20 has been held widely, I think you'll know that it has more weakness coming if it broke the low of Friday.
Yes,
it would make sense. I think if you've been waiting, or if you like the entry opportunity in stock, then stop below the low on Friday seems to be a good area where you admit defeat in the short term. But I think when he moves above this kind of double or two top range up here, this looks like, yeah. So if it was to bust out of this, make new highs around 28 or so, I think a lot of traders would look at that to play the breakout opportunity as much as anything else.
Okay. It's never far out of the news, Moderna.
You're right about that.
All right. Everybody knows they have a vaccine pending. The news today is Israel is thinking of buying their vaccine. And Moderna, remember, said last week it's starting a trial of 30,000 people next month on their vaccine.
Pretty good number.
Yeah, relatively new stock, SelectQuote, SLQT.
LQT. Oops. But one more time.
Yeah, so this is a recent IPO. Credit Suisse began coverage of them with an outperform rating. And they said that they like the company because they are a beneficiary of the fast-growing Medicare Advantage market. They went public on May 21st. And now a whole slew of companies are following them. I'll just give you the ratings of the different companies. Morgan Stanley has it as equal weight. Piper Sandler has it as overweight. Cantor Fitzgerald has it as overweight. And RBC Capital has it as overweight. So at least it's got some institutional analyst support.
Mm-hmm.
It's obviously, it's kind of right at that previous high. See what happens.
Yeah. Right there. It's been limited time, obviously, here,
Right.
Lee. But you talk trending, you can see that in the uptrend, the blue 20 EMA here on the hourly has been acting as support and then resistance on the way down. It is now supportive. So, depending on your time frame, if that's the time frame you've been looking at, this might be an easier way to check it. Those daily charts are tough the first few days of a newly trading security.
Right. All right, let's see. Covered those. Let's take a look at American Express.
Whoops. No, still not that. No. Come on. All right, one more time. AXP. There we go, Lee. I knew I'd get there eventually.
All right, there you go. Pull back to the 20-day and horizontal support. News there is that they did receive approval to start bank card services in China. It's the first foreign company.
That interesting, nice tail there, right at the horizontal support too, Lee.
Yep.
They already bought that up this morning as it broke below the 20-day.
Yeah, you got your levels there if you like the stock.
Mm-hmm.
All right, robot.
I think that's IRBT. Is that right?
That's correct.
All right.
There you go.
Breaking out.
Breaking out. Held the 20 on this pullback. Is that an all-time high?
Let's find out.
No.
But an interesting throwback to the all-time high on the long-term chart at one point.
Yep.
Good support in there. That's an interesting, big pullback. Wow, 133 down to 30, less than 38, all the way down to 33. Gave up 100 points. Nice move back on 20 here, though, Lee. Wow.
Yep. Sometimes when you get moves like this, I think you still have to use the 20. If you want a shorter term stop, you'd use the low of today. But the 20 seems better. Anyway, the news on them is they guided significantly higher on their Q2 revenues. Okay. Let's see. 3M. Dow stock. Down, but bounced off the 50-day.
Look at where that last, a bit of a downtrend that's been in play here.
Yeah.
Long term. Ran right to it too, Lee. Look at that. If I extended this. Oh, something like this at least. So right now though, you're still getting a higher low. Hit the 50 quite nicely, as a matter of fact. That's a good area of support historically too.
Yeah. The news wasn't that great though. They said that their May sales were down 20%.
Well, that isn't a win, Lee. That just was quite dour way of replying to my commentary.
But technically, it's still a nice bounce off support there.
Yeah. I mean, short-term traders can probably look at this, but I think if you're an investor, you're waiting to kick that downtrend out before you really want to be long here. So you basically got to watch these peaks and then try and take out at least one of them here to give you reason to think that the downtrend in the longer term might be over.
Yes, indeed. I know you follow this one, Tandem, TNDM.
Okay, a little too much time on the chart here. Let's back that up. There we go. Speaking of a retreat to the 50.
Yeah, kind of trapped between the 50 and the 20 there.
Yeah, a bit of a double top up there too. Not the only one in the market, but what's the news here today, Lee?
Yeah, they had positive data related to their automated insulin delivery system.
Okay. Yeah, I think the good way to set your risk here against the 50-day, if you choose. I mean, the 50-day is nice and tight. You can see gotten below the 50-day on an intraday basis, and so you short-termers might risk getting stopped out if you put it just below the 50-day. But you might also look at either the low from last week right here or the low from this day right here. You could kind of set your risk against those. Obviously, the deeper you are willing to go to put your stop, the fewer shares you probably want to maintain. But the setup is pretty interesting along the 50 daily.
Yeah, I think that's where you had to look for that one. All right, Amerisource Bergen, ABC.
That's got to be the best symbol in the marketplace.
I know.
Little consolidation happening here, Lee. At least right now, you've got 2 consecutive inside days here. Unfortunately, below the 20, not ideal there.
Yeah, the news on them though, they were upgraded at Morgan Stanley to overweight.
I think
There's horizontal support under those tails. Look at how those tails the last 4 days
right here.
right there. There's your level if you want to go long.
Yeah, I think
To
you're
set
right
a
on
stop.
that. Now, still though, Lee, some traders would wait even to consider entry until you got above the high from Friday, though, wouldn't they?
Yeah, I mean, just with all
Maybe more
trading, the more
conservative traders.
confirmation you want, the worse price you're going to pay.
Yep. But in reality, that confirmation is like a warm, fuzzy blanket, in my experience, Lee.
Yeah. Twillo, TWLO.
Well.
A little flagging action going on.
Boy, did it really, really hold up well after this gap, didn't it? Wow.
Yep.
Super strong there.
Yeah. Anyway, the news on them, they were upgraded to overweight at Piper Jaffray.
Now, that looks real intriguing.
Yeah, that's a weekly flag.
Yes, it is. Keep an eye on that one. Some interesting levels here, basically sideways 180 to 2. I mean, if you take in the highs here, 210, but a pretty good consolidation after an exceptional pop.
Yeah, strong looking chart there.
Mm-hmm.
And here's a downgrade. Advanced Auto Parts got downgraded to underweight at Atlantic. I'm not familiar with Atlantic though, but stock didn't react much. Apparently, nobody else is that familiar with Atlantic either.
I don't think anyone's running for the hills here. You do have a good area of support right below, though. I mean, I can put in a level here. If you can just kind of meander through time for a couple of days, get that 50-day to catch up, I think you're going to find this to be a pretty good range of support in this area. And then if it's below this area, that changes the look of the chart. You probably short-term don't want to be dabbling necessarily, but pretty good area of support right in here.
All right, let's take a look at the indices.
You got it. So the SPX is off about 40 here. You mentioned, Lee, that in the overnight session we were off a lot lower, a lot more actually. So we've already seen a little bit of a bounce here. Let's just check the intraday chart to see the levels. So we gapped S1 on the open. We have bought that up, but we have brought it to resistance here. And you're seeing the fails come into play against the exponential moving average, the 20-period EMA here, Lee. Notice the tail's right at it. Now we're well off of that. So, you may anticipate additional weakness as long as we stay below the pivot for the rest of the day here, perhaps. So, the pivot might be our best case scenario on an intraday basis for some traders here, but that's kind of what we're going to continue to eyeball. Is kind of the range here, 3,038 out of 2987. Do we hold S1? Do we should we push even lower? You know, the feel of this morning to me, even though we had a pretty favorable finish on Friday, I was kind of surprised by the overall strength on Friday. We really didn't give much of the opening move back when it got to the close, Lee. Um, I still feel like we are in a bit of a discovery mode now as we continue to digest new information on the virus situation, which, you know, nationally remains relatively constant in terms of new cases and deaths, but there are many hotspots out there right now. And of course, the problem with hotspots is hotspots beget news coverage of said hotspots. And then the more coverage you get, you know, we kind of get back into that self-fulfillment prophecy going way back into late February, early March, where things started to get a little squirrely on us again. So, you know, the rhetoric, so to speak, or the narrative, the conversation around it could be a little difficult.
Yeah, and just, you know, as we said on charting the markets, kind of from all the data that I've seen, short-term choppiness to slightly bearish, longer term, you know,
Mm-hmm.
pretty good.
Well, you
But
know what? We would take that, you know, to be honest. If we go neutral here and maintain a 2,800 to 3,000 S&P range, I think many traders are going to be more than fine with that. The what we don't want to see, obviously, is breaks below 2,800 here, approximately, which would, you know, make for things would look a lot more dicey if that were the case. But I think the general consensus, Lee, is that the fundamentals are better. You know, certainly better than we had a right to think they would be at this point. You know, if we go back in time 3 to 4 months, we're talking about the fundamentals of the market in June. I think we could suggest that the current situation from a fundamental standpoint is probably better than we expected it to be.
yeah, I got a question. What would you look for a signal to buy the dip on the S&P? I would say a test and hold of those highs back in the end of April and May. We're almost there, a little lower.
Yeah, I mean,
Bring your cursor. Yeah,
yeah, so we
right in
had that
there.
today, you know. So the low today took us into that range,
Yeah, they did buy
you
it
know.
there.
Yeah,
So
so if this is the level that gets bought up, the question becomes, where do you get confirmation, Lee? Many traders would say it's above the high from Friday.
yes,
And then unfortunately, if you just look at it right now, where are we? 29.98. The high from Friday was 3,088, 90 points away. So 3% plus in terms of upside before you can even really feel more confident. And so, of course, you start to put all that together and you start to wonder, does that mean I should be trying to buy now with a tight stop or maybe a stop below the 50? You know, what is the risk reward setup for you? And when you start to reason through all of that, you start answering those questions and you'll know whether or not you want to dabble at this point. And if you do want to dabble, obviously you want to, you know, make sure that it's the requisite appropriate amount of shares and or dollars.
yeah. So that 2950 is a key level.
I think so too. All right, let's check out the NASDAQ here, Lee. Looks to be our relative outperformer for the day, negative, but by the least amount. We are below the 20-day. This is the first time below the 20-day, Lee. And you got to go back into April 3rd.
Yeah.
Goodness gracious. So it's been a really strong move. Now, this is pretty much a crux moment, Lee, for the Nasdaq, at least for the composite. We'll take a look at the NDX here in a sec, but the move below the 20-day is going to do one of two things. It's either going to signal more weakness by closing below the 20-day, or that close below the 20 could bring in more buyers.
Yeah, because you do have that support where you drew it in there at 9,300-ish.
Mm-hmm. Yeah, 93, yeah, 93.20, call
Yeah.
it. But man, that's still 170 points
Uh,
away from here. 170 NASDAQ points doesn't feel very good. as we saw last Thursday.
No. Now the bulls would say, well, you'd still have, even with where we are today at the low,
Hmm.
you still made a higher low than that tail
Hmm.
back in the end of May.
That's exactly right. And then you look at the lows from Friday at 94.13 and change. Today's low 94.03. So we actually got below it by 10 points. And then that got bought up. So there was an impetus to buy at that 9,400 ledge, kind of coincident with these two peaks here, 94.05, followed by 93, 92, and 94.05 on consecutive days. So yeah, right around 9,400. So yeah, it's kind of an area to keep a close eye on here for the composite. I wonder if the Nasdaq 100 though, Lee, has broken the 20. That looks pretty darn similar, doesn't it?
Yeah. Now it is leading today, versus the Dow and versus the S&P. I almost think at these days that's almost a little bit of a negative because
Hmm.
it used to be the other way around, but now people are using the mega cap tech stocks as a defensive play. I've been noticing that for the past couple weeks. So
Hmm.
it just goes to the growth, not cyclical value trade. So
Hmm.
I'd almost rather see the the Dow do better than the Qs, or the S&P doing better than the Qs, because they are going back into those big liquid names, which is a defensive move at this stage, I think.
Mm-hmm. Yeah, that makes some sense to me as well. One thing we didn't call out, Lee, when I headed up the S&P, and I should have done it. Um, we were talking about last week just the negativity of the S&P, and the one thing let me hide some of this stuff for y'all. Try this one more time. There we go. Take a look. We had that bearish engulfing candle didn't quite materialize, did it?
No,
Um,
because of the rally at the end of Friday.
yeah, that's pretty interesting. I was listening to Charting the Markets, and Bruskoff was suggesting that, oh yeah, this looks like it's going to hold. Bearish engulfing candle on the weekly, and yet it actually got back into the range enough to eliminate the engulfing candle. Interestingly, it didn't mean much because we still had a nice strong a weak opening regardless, right? Um, but I thought that was kind of intriguing. All right, let's talk about the the Russell, excuse me. That's 2 days below the 20. Actually, that's 3 days below the 20 now, Lee.
And below, now we're below the gap too.
Yes, we are. So this looks like it's calling into question at least the 50-day here.
Yeah, we're gonna chop around in this range now.
Yeah, and that would be our best case scenario right here, I'd say.
Yep.
Right at 1300. So I'm going to keep an eye on it. Transport also below the 20, but this is really 2 out of 3 days. It had a nice doji here on Friday. This continues to be all about the airlines, though, Lee. If the airlines are going to continue to
Yeah, now we have
be
a
volatile,
question.
mm-hmm.
Speaking of the airlines, we have a question. Let me get here. Okay, so Ben and George is saying had a big pop up on an airline stock, didn't take any profits. Is there any rules of thumb? Uh, well, uh, IBD, Investors Business Daily, and William O'Neill suggests you should take partial profits at 20 to 25%. And then what most people do at that stage is they would bring their stop on the remainder to break even. So no matter what happens, they have a winning trade.
Mm-hmm.
So that's one thing. The second thing is to manage a position after you take 25% profits, you would basically, if you don't want to go all the way back to where you bought it, again, where your stop raised to where you bought it, you would look for some either trend line or moving average that has been consistent with that stock to keep moving your stop up in a trailing manner. And when that gets taken out, then you would get out of the position. So a couple ways people do it, but those are two ways. Also,
Yeah, I
people,
know
if
that.
you
I know it's.
go ahead, I'm
Go
sorry.
ahead, Lee. I'm sorry.
No, and there's always a rule of thumb. You take, if you get a double, if you're lucky enough to get a double, you take your um, initial investment out. So now you're
Mm-hmm.
trading with profits.
Yep. Yeah, that I know that's a challenge. But as a trader, the one thing that I've grown extremely comfortable with is selling some along the way. And I know it's really easy. I'm up 50, 60, 70%. This looks like it's going to continue. Always ask yourself, what if it doesn't? And the question, what if it doesn't continue, should encourage you to take some off the table. And the best part about selling some with 50, 60, 70% profit is that you're going to be right no matter what comes next. If the pullback happens, you're going to emotionally be cool with it because you sold some, you took some profits. If it continues to run, you're going to emotionally be cool with it because you kept some. You've got participation. You're still running in the right direction. I think it's an excellent way to manage emotions in your trading process. How about a quick look at some sector action here?
Yep.
All right. So the communications group, huh? That's interesting bounce here by the XLC. Interesting relative outperformance is what I mean to say, not bounce. But Lee, look at this area here.
Hmm.
It is below the 20.
But that's
But
pretty good. But that's pretty good horizontal support there.
it really is. Not to mention there's pretty good horizontal resistance up here, though. I mean, it's come up to this range 3 times in the last few months, as you can see. Yeah, and there's a nice big tail up there from last week. Pretty small group, but seeing the staples be a relative outperformer here. Getting the doji at this area is kind of interesting. This is I think many of us would call this an area of support right in this neighborhood.
Yeah, let's look for staples over the 50-day, which gives a little relative strength.
Mm-hmm.
In case they start worrying about the virus even more, that would hold up probably better
Yeah, I
than
would expect the same.
some of the cyclicals.
Yeah, it's such an interesting dichotomy right now, Lee. As I'm been outside a bunch. I feel like the summer is warming up and everything's starting to really get rolling, and yet, um, I've been to many Home Depot visits in the last week, um, and everybody's wearing their masks, everybody's doing their part, but it's this push and pull between protection and diligence and wanting to get out and do some things. It's been difficult to say the least. Okay, Lee, you said over the 20 made some
No,
sense for.
I think it was over the 50.
Oh,
Yeah.
you're right. Excuse me, the 50.
Yeah.
I apologize. There we go. Let's make sure we're in staples here. So we've got all industries and sub-industries. We do. So greater than 10, greater than the 50 SMA, enough volume at 500,000 for 6 months, and well rated by the Schwab Equity Ratings gives us a nice tight, tight list of 9, Lee.
Yep.
So quickly save that. And let's open that up. I thought we could start with one that just is common on this list. I thought we could check out CL.
Okay.
I know it's going to load any second here, Lee. There it is.
There we go.
All right, so let's just check CL real quick and then see what else y'all want to hear about.
Well, that's a little cup and handle.
Oh, this is the first. There's your cup.
There's your handle. The
Handle throwback from 75 to the 20-day here. Nice. Depth of the cup, Lee, say 73 and a half to from 66 and a half or so. About 7 points. And Lee, would you have to take out the height of the cup to add those 7 points? Is that the idea?
yeah, it depends
In
on
terms of the
how you
measured move?
draw that. You could say that those two highs at the beginning of June is the pivot there. And
Here?
no, then now
Oh,
down.
sorry. Beginning of
Yeah,
June. These ones right here.
that's right. So that's the first handle. Um,
Mm-hmm.
I would wait till it, while we're bouncing off the 20, if you are a true cup and handle trader, you would want it to take out the high before the handle started, which it did, but failed. So now you'd have to wait for that again. Alternatively, if you want to try to front run that, you do have a tail on the 20. But for
Mm-hmm.
added confirmation, the typical way that's traded is a takeout of the what we call the pivot high, which is the high of the right side of the cup prior to the handle.
Okay.
Yep.
That makes good sense to me.
Yep.
That's an interesting setup. All right. We had a request, Lee, for Monster Bev. A
Well,
little deeper of a pullback,
yeah,
but that's an interesting area from a horizontal support standpoint.
right. I think you'd like to see a bounce off of there before you get, because you could break that and go down to the
Mm-hmm.
50 too. So again, when this situation, okay, um, if it starts bouncing off that, you'd have to look at the intraday chart. If it starts bouncing off that, you could add a little, and then, or you can wait to see if it breaks, and then maybe at the 50. But you got resistance at the 20 now too. But
Yeah, I think buying now would be a little early.
yeah, I do too.
The gap move lower today could be a spot of support, but that's dicey, I would say. In fact, I could even lower this a little bit. Um, looking at the low here, 66.22. Yeah, I think this suggests patience in the short run. Wait and see what happens here because it feels like we're in a little bit of a vacuum area. The 50-day is coming up, but 3 days below the 20, it doesn't give me the enthusiasm that I'd like to have. I'd like to see this start going higher before I'd maybe initiate position.
Yeah.
Lee, we had a question from Barry that I think is pertinent given our conversation here just a moment ago on CL. How deep can a handle be before it is invalidating the possible cup and handle?
It shouldn't be more than 10 or 15% of the depth
Okay.
of the cup.
So if we go back just real quickly from a quick teaching moment, we know that this is about 7 points in depth. So you wouldn't want to give up more than $1 into the range or so. That would negate more than that would negate the possibility that it's a cup and handle.
Oh yeah, 10 to 15%. So if you did 15% of what? So it'd be 8 points.
10% would be 70 cents. 15% would be about $1.05, $1.10 on a $7 cup.
Well, $7. Is it a $7 cup? Yeah. So
Yeah, it's about a $7.
yeah. So it's right on the
Maybe.
borderline there.
Yeah, it's close, right?
Yeah.
I do find it interesting though that one thing that stands out is that it did find that 20 date. So I mean, I think that gives you a little bit more optimism that it's trying to resolve favorably. Is where I would look at that.
Yep.
We had a request about where's the handle. So let me just quickly, Lee, you mentioned, so here's the first part of the cup real quick, and then we'll move on here for you, Lee. But there's one side of it, there's the other. And then when you look, ooh, I tell you, those lines, I love playing with me. And then when you're, excuse me, the first handle is right here, right? It came lower, right here, and then it broke out, but you're getting a subsequent handle. And that's why Lee was saying that you might want to get back above this ledge here at around 73. That would tell you that it's above that, excuse me, the cup and handle pivot level.
Yeah. Oh, and with that,
Yes, it is. Lee, up next we have, now not next, you get a little bit of a break here this morning, everybody. We have at noon Eastern, Spotlight on Futures.
what's coming up next?
Spotlight on Futures, Director of Schwab Futures, Mike Zaremski, joined by special guest Bob Iacchino. And then we have Lee returning for Charting the Markets, 1 p.m. Eastern. Fellow CMT and Schwab Regional Investment Strategist, Mark Idam. Good conversation we had there. So thanks for joining us, everybody. Appreciate your participation. And Lee and I hope you have a fantastic rest of the trading day. We'll see you all tomorrow for Trader Talk again. Have a good one, everybody.
So Schwab just taught me about an iron butterfly spread.
Nice. I just tried an iron condor.
Only spread I've been introduced to is this onion chive.
It's time to trade up to Schwab, the firm invested in helping you become a better trader.
Earnings per share, or EPS, is one of the most widely used ways to gauge company profitability. To calculate, divide the company's profits by the number of outstanding shares. EPS matters because strong earnings tend to drive the price per share up, and that's good for investors. Earnings also generate money the company can reinvest in growth. But EPS has limitations. If a company uses earnings to buy back shares of its own stock, there are fewer outstanding shares in the equation. That drives the EPS up without any actual increase in earnings. EPS also doesn't consider outstanding debt, or that two companies might have the same EPS, but one company used less capital to generate the same profits, indicating it might operate more efficiently. So while EPS is a fundamental factor in assessing stock value, it's most useful when considered along with other metrics.
Hello, and welcome to the Quick Start video where we cover Screener Plus and Sectors tool available on Schwab's Street Smart Edge platform. The Screener Plus tool can help you identify securities meeting certain criteria by setting up custom screens, as well as providing a variety of predefined screens. You can find the Screener Plus tool by looking in Launch Tools and clicking on Screener Plus. Let's start with predefined screens. The predefined screens can be found along the left rail. Here you can find a variety of equity and options screens. You can find top volume, gainers and decliners, high-low for the day, performance by sectors, and many others. Click once on a screen and its results appear in the body of the window as a new tab. From there you can use actions to print or export those results, or you can click on Save as Watch List to quickly create a watch list out of the results of your screen. Click on Criteria to view the criteria used to produce the current results. Let's talk about custom screens. You can create a new screen by right-clicking on the plus sign to the right of the tabs. Here you can select from popular fundamental and technical criteria. Alternatively, you can easily edit predefined screens by going to the Criteria tab and making changes to that screen. You can name your screen and click Save Screen at the bottom to save those changes. Let's talk about the Sector tool. If you were interested in performance data for sectors, you came to the right place. Schwab has GICS, or Global Industry Classification Standard, for sectors, industry, and sub-industry. You can drill down to the sub-industry to see the individual securities and even save them to a watch list. This concludes the Quick Start Guide for Screener Plus and Sectors tool for Street Smart Edge. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab and have a great day.
Thanks. Bounced a trade idea off my firm. They don't get it.
Schwab shows you indicators, proprietary research, helps you see the full picture.
Speaking of...
Trade up to Schwab. The gut check you want, the intel you need.
Pivot points are a tool that floor traders and market makers have used for decades to predict the next trading day's intraday support and resistance levels. Pivot points are calculated using the previous day's high, low, and close. You don't actually have to do the math because the trading platform will do it for you. At Schwab, the pivot point tool shows you 7 levels. First, the pivot point itself, the orange line here, consider the equilibrium point. That's the point around which the next day's trading is expected to occur. And then 6 other pivot levels, the blue lines, that's 3 resistance lines above the pivot point, R1, R2, and R3, and 3 support levels below it, named S1, S2, and S3. That gives you a lot of data that you can use to determine when to enter a trade, when to exit a trade, and where to place your stop. This data is important because all pivot levels can act as intraday support or resistance. Think about them like rungs on a ladder. A breakup through any pivot level is a bullish indication and suggests there may be further upward movement to the next rung, and this signals a possible buying opportunity. On the other hand, if the stock falls through any of the pivot levels, it is a bearish indication and suggests an opportunity to short the stock. You can also use pivot points to set short-term targets for your trades. Let's look at an example. As soon as the stock breaks through the pivot point to the upside, you might buy with a potential first target at R1. Here you might choose to sell some or let some ride until the next target, which could be R2. Similarly, if a stock drops down below the pivot, you might consider setting a downside target of S1. If it stays there and then drops further, you could reshort it with a target of S2. So remember, a break through any pivot level can indicate an opportunity. If the stock or index has been rising and then starts to reverse, you can short the same stock or index you were previously long. Besides setting targets, pivot points can help you manage your risk by indicating where to set appropriate stop losses. For example, if you buy a stock because it broke through a pivot level, you might consider placing your initial stop under that pivot level to limit downside losses in case the stock reverses. If it continues rising and goes up to the next level, you could raise your stop to below that next level to attempt to lock in upside gains. Similarly, if you are short a stock because it broke down through a pivot level, you might place your stop loss just above that level to limit losses in case it moves higher. But remember, there's no guarantee your stop order will be filled at or near your stop price. Pivot points are often combined with other technical indicators like moving averages and MACD to gain added confirmation. To learn more about technical indicators and how to use them, watch the other videos in this series and subscribe to our YouTube channel.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders. Schwab, the better place for traders.
Controlling risk is a major component of any trading strategy. Bracket orders can help you automate risk management and reduce your emotional involvement. When you use brackets as part of your opening trade in Schwab's Street Smart Edge platform, you can place a limit order for a stock at a price you set and then bracket your exit strategy immediately upon execution. You can simultaneously help protect the downside with a stop order and position yourself to capture upside gains with a profit limit order. And this is a big difference from traditional orders where you'd have to wait for your limit order to execute and then place either a sell stop or a profit limit order, but not both. Brackets are contingent, so only one end of your exit strategy can execute. This allows you to place both a profit limit order and a stop order at the same time. Any trader who's forgotten to set a stop order after buying stock will quickly recognize how helpful brackets can be. They can allow you to walk away from your trades with your emotions in check. You've analyzed and put your trade in motion. You don't have to monitor it. You can just stick to your plan. It's important to keep in mind that while bracketing helps with risk management, stop orders will not protect you from a gap in prices during market hours or from one regular session to the next. To start a new position with a bracket, a trader needs to first establish profit and loss targets. While some traders will analyze a chart to set these price levels, it can be effective to simplify the process and exit based on a specific dollar or percentage amount instead. Let's look at an example of a primary order to buy incorporating brackets. A stock is currently trading near $53, but has been trading in a range between $52 and $58. Working with this range provides some parameters for a bracket order. You could place a buy limit order below the last trade, say 52, and set a stop order at 51 to attempt to limit your loss to $1 per share should the price move lower. At the same time, you can place a profit limit order at the top end of the range, $58, which the stock has recently hit twice before retreating. Remember, you can use bracket orders with a short sale as well. Brackets can also be added to an existing position at any time. Some traders like to add brackets to equal portions of a position at various prices. This laddered approach to exiting can help to protect your capital as markets move against you or boost your profit if things move in your favor. Another key benefit to brackets is that they don't expire. A traditional stop limit, or limit sell order set as good till canceled is only good for a maximum of 60 calendar days. But a bracket order remains open until your price is met or you cancel it. So to summarize, bracket orders are just one more risk management tool that can help you preserve your trade capital. They let you set predefined price triggers for your stop loss or profit-taking exits, and they offer flexibility. You can place them along with a limit order or on an existing position. And they're automated, so you aren't tethered to your screen. When you include brackets with your limit entry order, your entry and exit orders are queued up and ready to be activated. To learn more, watch the other videos in this series and subscribe to our YouTube channel.
Price to earnings ratio, or PE, is a way to value a company by comparing the price of its stock to its earnings. The PE equals the price of a share of stock divided by the company's earnings per share. It tells you how much you're paying for each dollar of earnings. Low or high PE ratios aren't inherently good or bad. When a PE ratio is low, it could mean that investors are losing confidence, selling shares and driving the price down, while earnings hold steady. The PE could also be low if the company's earnings grow quickly, before investors notice and start buying shares, driving the price up. Similarly, a high PE could result if investor excitement drives the share price up, while earnings remain low. Or that high PE may be justified if the company is poised for growth. Make sure you research companies carefully. Compare the company's PE to others in its industry, and analyze any inconsistencies. PE is a complementary tool. Use it with other factors and information when evaluating a company's stock price.
Hello and welcome to the Quick Start video for layouts in Schwab's Street Smart Edge platform. Layouts in Street Smart Edge are different views you can create to help organize your workspace. They are conveniently displayed in tabbed format with up to 8 layouts able to be open at one time. For example, rather than trying to fit all the research tools you use plus trading and account information on one screen, you can create one research layout and one trading layout and flip between the two. The possibilities for organizing your work area in Street Smart Edge are extensive and designed to meet the needs of a variety of trading styles. With Street Smart Edge, you can create your own layout or choose from our predefined layouts. One predefined layout is the account layout. This layout provides tools to help traders monitor their accounts and includes 2 account details tools showing order status and balances, a My Positions watch list, Symbol Hub, and messages. Another predefined layout is the Screener Research layout. Designed for seeking and analyzing potential trade opportunities, this layout includes the following tools: Screener Plus, News, Research, and Notes. The last predefined layout is the Trade layout. Designed to help make the trading process efficient, this layout includes the all-in-one trade ticket, news, chart, watch list, account details, and messages. Once your layout is the size that you want, add tools from the Launch Tools menu. Remove tools by clicking the X in the upper right corner of the tool. Expand or contract the size of a tool by moving your mouse over the edge or corner of the tool until you get a double arrow. Then click and drag until it's the size you want. You can move tools by clicking in the title bar of the tool and dragging it to another spot in the layout. Edges of the tools are magnetic and will snap together when they are placed close to another tool. What about linking? With Street Smart Edge's tool link icons, when a security is changed or loaded into one tool, all other tools with the same link icon will automatically update to reflect the symbol change. Here's a tip for those of you that use multiple monitors. You can undock layout tabs from the primary window by clicking on a tab and dragging it outside of the primary window area. Let's talk about saving layouts. Whether you started a layout from scratch or you tweaked an existing predefined layout, you may rename the layout and save to either the local computer or to Schwab's server. Remember, up to 8 layouts can be saved to the Schwab servers. This concludes the Quick Start Guide for layouts for Street Smart Edge. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab and have a great day.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades, plus quality trade executions on our powerful platform. All from the only firm that offers a satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Average true range, or ATR, is a technical indicator that can tell you how volatile a stock has been on average over a specified period. ATR is particularly useful for setting exit levels as part of your risk management strategy. It can also give you a sense of how strong price moves are, which is helpful if you're trying to identify the start of a trend. In short, ATR takes a holistic look at a stock's price moves over a set period and smooths them out into a single number expressed as a dollar amount. ATR is based on the concept of true range, which is basically a way of measuring a stock's daily trading range that accounts for gap openings, which are when a stock opens sharply higher or lower relative to the previous day's closing price. Why is it important to account for gaps? Here's an example. Imagine two stocks that both close at $50 a share. Overnight, stock A gaps higher and opens at $60 a share, while stock B opens close to its $50 close the day before. Stock A then goes on to trade within a range of $3 between its daily high and low, while stock B trades with a wider range of $5. Traders who only look at the stock's daily trading range might say that stock B is more volatile because it experienced wider price swings that day. But this fails to take into account stock A's $10 gap up overnight. True range allows for gap openings like this by comparing the day's highs and lows with the previous day's levels, giving you a better sense of how much the stock's price has actually moved over time. Averaging out a stock's daily true range values over a defined period gives you its ATR. The default period on many trading platforms is 14 days. Some traders also use 20 or 22 days, as there are generally between 20 and 22 trading days in a month. Before getting into how to use ATR, there are a few things to note. First is that ATR is based on absolute price changes, not percentage changes. Accordingly, higher price stocks typically have higher ATR values than lower price stocks. After all, a $10 move in a $100 stock is less significant than a $10 move in a $20 stock. Second, changing ATR values indicate changes in volatility. If a stock's ATR is rising, it means volatility is increased over the period, either because of a sharp rise or a sharp fall. ATR doesn't tell you which direction a stock has been moving, just that it has been moving. If the ATR is shrinking, it means the stock has been less volatile over the period. So how do traders use average true range? Some traders use ATR to help them set stop-loss levels. Say a trader sees a stock trading near a support level and the stock has a 20-day ATR of $2.25. They may place a stop-loss order a bit more than $2.25 below support so that a one-day move through the support might not trigger the order. Remember, too, that there is no guarantee an order will be executed at or near your stop price. Traders can also use a